The message from the results from Target and Home Depot this week is really a mixed bag. On the one hand, as you say, Target produced better than expected results yesterday, but the day before, Home Depot came in with quite significantly worse than expected results, actually. And I think what it shows is that the consumer environment is still really challenging, and these big box retailers in the States are going to have a difficult time navigating all the different crosswinds that exist right now.
Paul, let me pick up here, actually. In terms of this disparity I talked about, and yes, I'm dramatic about it, but I'm trying to make this interesting for our viewers as well, between what the market is saying and what the Federal Reserve is saying. How concerned should we be about the fact that we are now 5 and a bit months, well, we're in the 5th month of the year, and the market seemed to be in, I would call it la-la land, but we'll call it in optimism world, and the Federal Reserve is a lot more cautious on rates. Does this mean anything to a lot of your estimates?
Yeah, I mean, it's a fair point, and there's this kind of unstoppable force, if you like, meets the immovable object with the market and the Fed saying different things about interest rates. But I think if you take a step back and look at earnings overall, not just in consumer land, but generally across the piece, they've come in or look like they'll be coming in roughly flat for the first quarter of this year. And if you think about where that pegs against expectations, not that long ago, the market was expecting earnings to be somewhere down around 10%. So generally speaking, corporate America has done a lot better than people had expected. So certainly some of the buoyancy in the US stock market is around those interest rate expectations. But let's not get away from the fact that earnings have been quite a bit better than expected.
Paul, the Target numbers were noisy yesterday, but in a very different fashion to what we've normally seen from noisy numbers. This in the sense that the inventory problems Target was having, it pinned on violent acts happening in its stores. And this is something that the industry body also picked up on, saying they've seen an increase in that. Some of the retailers not even operating in certain areas because they feel as though there's a risk to worker safety. How much of this did you digest as an industry-wide problem and something that is now significant for earnings versus just a Target problem?
Yeah, it's really interesting. Shrink as a problem for the industry is not new, but I think we've definitely seen an acceleration over the last couple of quarters, and companies like Target are spending quite a bit of time on their earnings conference call talking about it. I think they said, as you said, 500 million this year, and that's going to weigh on gross margins going forward. I don't really know what to think about it, to be completely honest. They will have initiatives going on in the background. They'll certainly be lobbying various bodies and political bodies trying to get support to solve this problem. But it is definitely worth keeping an eye on. I mean, that 500 million is quite a jaw-dropping number when you consider the company generated roughly $3 billion in income last year, and it is definitely going to weigh on gross margins. And I think that's quite important for Target in particular, because whether Target can get back to the levels of profitability that it was enjoying before the pandemic is going to be a major thing for investors going forward. So certainly it's worth watching over the next couple of quarters.
Well, the reason I bring up the question around Target specifically is that there are other issues that have been reported, and one of them is a practice, a policy that Target has that you can return certain labels of clothing with a 1-year guarantee. And apparently there's a whole heap of videos posted on TikTok that parents are bringing back used clothing when the kids are grown out of them, or if they're ruined, they're bringing them back and they're just claiming money from Target. So one does make you think, are the policies at Target wrong? The issues that they're facing on the macro side, one thing. Is it also an execution error potentially that we're seeing from this one retailer at this point in time as well?
Yeah, absolutely, Karen, I agree. I think that could probably be the case. And we will have to see what Walmart says today, whether they're experiencing shrink of a similar level to Target. But I think probably these kind of issues will likely affect the retailers that sell more general merchandise, more of those discretionary items, because that has really been where the problems have lied across the retail spectrum, really last quarter and this quarter. And we saw it again yesterday, Target saying that they're struggling with those higher ticket items. And certainly that is unfortunately going to be the types of merchandise that attracts this unruly behavior and this quite shocking level of shrinkage that they're seeing right now.